There we go in recording.
Hello, Bucky, again. How are you today?
I'm doing well, and yourself?
I'm fine, thank you very much. My name is Jiří Borch. I'm calling from the Czech Republic, Prague area, and my honored guest today is Bucky Nicholas Buchanan. I hope you pronounce your name well.
Yes, you did. It's Nicholas Buchanan. That's correct.
Yes, perfect. And I have the honor to talk to you today about your venture studio, Block Perfect. And could you tell me, please, a little bit about what you do for a living, briefly?
Sure. So I'm the general partner for Block Perfect, and we're a venture studio that's focused on revenue as opposed to fundraising. So we bring our students through a series of cohorts that isn't advice, but actual step-by-step instructions on how to start a business and get it to revenue. And we've designed the programs around the working life of a busy professional. So people don't have the luxury of simply taking years off to build a business. So we give them a pathway to transition from the workplace and then into a business ownership progressively over time.
Thank you very much for a nice introduction. I have studied a little bit deeper your site, and I found that your mission is supporting startups in AI, blockchain, intellectual property, and creator economy. Is that right?
Yeah, that's correct. We like to focus on those three areas because we feel they're deeply interconnected. The large language models that are being used to make decisions today really should be a public artifact. It should be something that's owned by everybody and not by a corporation. The other reason for that is just the sheer scale and expense to train these models. If we look at OpenAI, it took 11 months and 10,000 GPUs to learn the initial data set. And the more bespoke that we expect the result to be, the more data it's going to require. So that's one pillar. The second one is with the advent of generative AI, we need a way to track ownership, the provenance of content from the original creator to all the derivative works in which that content was used. Because it's our belief that original creator should be compensated for the derivative works by which their original work was created. And we think that this is necessary for the health of AI in general, simply because what people don't necessarily grasp is that it's not a panacea of content. What it is an amplifier of what's already there. So if you don't have the original content in order to create this new content, then it's of no value to anybody. So the content creators will always be part and central to the equation, which is the third part of our investment thesis, is that there needs to be strong intellectual property rights, strong identity rights around content, and there needs to be modalities in which identity is both highly identified in one context and highly anonymous in others. And we feel that's what's necessary in order to actually create this freer world that we see. And that's kind of the underlying thesis. The more that we can empower individuals to be self-sufficient financially on their own, the more they can realize some of these more loftier goals of economic equality that we're looking for.
Bucky, I will turn away a little bit from our talk now, because before we started, you mentioned you are in California. How is the weather there now? Because here is a nice weather, a little bit raining, sun shining. What about in there?
Oh, goodness. Well, it's a little overcast today, but that's a welcome change. It's been 100 plus here, and it's to have a little reprieve, something not looked poorly upon. That's for sure. It's a welcome form of relief.
Yeah, I would like to encourage all our listeners, if you have any questions for Bucky, please do not hesitate. Write down under this video. He will be very happy to answer all your questions. And let's continue. What inspired you to venture studio, to start up the venture studio, actually?
Well, it was inspired by a company called Armor Scientific, which is a company I took to RSA in 2019. And it was through that process that I realized that I had really wasted a lot of time, a lot of VCs. I did not understand what a VC investment looked like. I didn't understand what I was competing against with other startups. My finances were nowhere near where they needed to be in order to pass diligence. And eventually we did find an angel that would fund us. But what I came away with that is that there's a lot of friction to the VC and fundraising process that eliminates a great number of people. And a lot of that is due to how the VC business works. So if I'm going to start a VC fund, I'm going to basically use statistics in order to make a bet that one or two of them are going to be my unicorns, right? And the revenue I generate from them by acquisition or turnover, what have you, is to make up for all the other companies in the fund that don't perform. So what you end up with is, if you look at the top 30% of venture funds, like your Sequoias and your Menlos and so on and so forth, they're doing about 1.58 TVPI, right? Which means that for every dollar I put in, I'm getting $1.58 out in investment. And for that privilege, I have to tie my capital up for 5 to 7 years. And if, I was a liquidity provider, for instance, to Andreessen Horowitz of the last crypto round, it was probably a pretty bitter pill to swallow to have all my assets written down in the process. So what's clearly coming out, and especially if you take a step back and you look at VC as an investment class relative to all the other investment classes, I can go to a registered investment advisor just down the street who's mediocre, and he'll get me 20% year to year returns just on their own. So VC has a lot of space to make up for. They're in a highly competitive environment, and they're underperforming the market relative to other investments. So when you look at a venture studio, it's a little bit different, because venture studios are willing to look down market. They're looking for companies that don't need to cross the chasm of 15% to become unicorns. They're there to hit doubles and triples. In fact, if you look through our partner network, there's a number of companies in there who are partners who were started by venture studios. I'll call out Turbo SBIR as an example. Another one, if you shop at Target, popular shopping store here in the United States, there's a Hims and Hers shampoo line that was started by a venture studio. So when we start to look at the finances of those studios, and because of where they're at in the market, and then unnecessity of becoming a unicorn, all of a sudden the returns start to look way more attractive. And on general, venture studios are producing 5.8 times TVPI. So that means for every dollar I'm putting in, I'm getting $5.8 back. And that is a complete game changer when it comes to returns. So that's why it's become so popular. And that's why also we're seeing it accelerated. In fact, we're seeing venture studios for venture studios now, if you can believe that. So it's going to be very interesting. The next year will be also very interesting. There's going to be a lot of more SEC oversight. Especially for the venture funds. They've marked it as a enforcement priority. So it'll be interesting in 2024.
You have actually answered my third question. How do you differentiate venture studio from others in the market? I think you have answered that, right? Yes,
absolutely. So a lot of times I would get told no, humiliated, I call it the VC stink eye. Right. And if you're thinking about it from the perspective of the fund, it makes sense for them to do it. Right. They need to get as many applications in so that they have the chance of getting that unicorn. Right. So it kind of develops this kind of rough veneer. And we didn't want to do that. We want to make this accessible to anybody so that, maybe you're mid-career and you've been in IT in a trucking company, and you know what, a way better way of doing logistics, right? And it was only by virtue of you being there, right? Those are the type of people that we want to bring in to Block Perfect, have them go through one of our programs, because we know those are highly successful opportunities. And the other thing that really sets us apart is we're set up for the full life cycle of the business. So we've got programs that'll take you from I've got an idea all the way through to the exit. So, and we're actually working with a couple companies right now on their exit. We do it through what's called leveraged buyout. But, you don't need to be at 10 million in revenue to do that. We have people exiting at $500,000 in revenues. Right? That's not a very high bar to achieve. And some people are getting, 3-4 times that back in cash up front, and they use that to start the next business and so on and so forth. So I think there's a lot of opportunity there. Our plan is to take the top 10% of all our participants, and we'll be going to rolling them into a fund, and then we'll be marketing them out there. And because they've gone through our programs and we've got a bespoke profile on exactly how they go to market and compare them against not only our sources, but sources like PitchBook and Carta, we can kind of pick the cream of the crop out there. And we think this can be highly, highly attractive to liquidity providers, especially those who are tired of getting 1.6% TVPI. Right, we're aiming at like for one of our exits, it's going to end up being a 3.6 times return on investment. Bucks. Yeah.
Bucky, before I proceed with my next question, I would like to ask you: have you got any questions for me at this point, at this moment?
Yes. Tell me more about the podcast. Tell me about your audience, and tell me more about what got you interested with the venture studio space, the venture capital space in the first place.
Yes. Thank you very much. I will start with the last question first. Retrospectively, I had a startup company with my sister before 10 years, and this was called Memo Point. It was actually a podcast for people. Retired people who are living in the retirement houses alone, and they are alone. So we would go with the camera, we would shoot some messages for the future generation with them. And of course, as you know, this was I went to many startup events and gala evenings, and I witnessed the best startups in the Czech Republic and in the whole world. For some seed stars and so on. So I was very interested in startup business back then. And however, this startup didn't go well, and it went to ICE. We put it aside with my sister. However, it was a great experience, and I continue with my podcast, focusing not only on the elderly people, but on the business owners. And because I like talking with people, I like sharing interesting stories about success and about something they are happy about, they have achieved in their life. So I made 250 podcasts yet, and I like meeting new people. So this is basically to answer in a short nutshell your question.
Well, thank you.
Thank you too. Thank you for being here, Nicholas. Buchanan is our honored guest today. My name is Jiří Borch. We are talking about startup business, and my next question is very interesting, actually. Can you share any success story or case study of a startup that your venture studio has supported in any area?
Yes, we're currently working with one startup, and the founders are in a state where they've kind of grown a substantial amount of audience, and they've not really have a passion for it. Their interests are somewhat elsewhere, but they happened upon this success quite by accident. What we've done with the company is we've brought in senior executive from the music industry. We've brought in also access to capital and a revenue operations team from the Carabiner Group. And we were able to establish that with this particular company that they had a conversion rate of about 7%. And 7% conversion rate revenue is something to crow about, right? But if you don't have the intuition to recognize that in your books, you don't really understand the opportunity is in front of you. So we looked at that and say, look, this is a fantastic opportunity for a leverage buyout. What we'll do is we're going to buy out the company for X million dollars over a period of time. You're agreeing to maintain these metrics. You're agreeing to allow our executives to come in and cover things in the interim period while we're raising capital. And then at the close of the transaction, we'll go out and buy that company. So that company will do $12.5 million by 2025. And we've raised the valuation from about $800K to $66 million by that time. So at a $4.5 million investment, that'll turn 3.8 times TVPI. Right, outperforming that outperforms Menlo, that outperforms what you're going to get with a RIA. It outperforms a REIT, like a real estate investment trust. It just basically smokes everything else out there. And we've de-risked the deal because we understand what their finances are right down to the month. So in other words, we know exactly what our activity needs to be in order to hit those metrics. And because we've brought out a team, especially from Caribbean Group and this particular CEO, we're able to contract what would be normally a 24 to 36 month timeline, and we're doing it in 18 months. Right. That's the power of the experience of the team. That's why you work with Block Perfect, is because you don't have 36 months to figure out whether or not it's going to work or not. You need it to work in 18 months. And that's what our specialty is. That's what all of our partners do as well. Everyone we work with is turnkey, and they're also very, very aggressively priced, especially when it comes to some of the higher polish items like video production, things of that nature, branding. And we even have a master series for companies that are a little bit larger. That's what you get to work with, like the former senior vice president of a major retail operation to know how to go global with your retail shop, that type of thing.
Nice. Two more questions I prepared for you today, and then we can let it flow. The people who are our audience at the moment could be interested in what criteria do you use to select startups you work with?
So this is where we're different is when you sign up, you can sign up for Venture Catalyst. It's open to anybody. The purpose, the very first module in Venture Catalyst is defining your market. And it's at this point that we're actively encourage you to cancel your subscription. Because if you don't have a market, you're not going to be able to build a business that's going to be able to generate revenue. But if you get past that point, we define where the market is, then we're going to start assuming responsibility for getting you incorporated. We'll pay for your AngelList subscription. We'll pay for your Live Plan subscription. You'll have an opportunity to work with one of us to help develop your financials so that you've got a defensible, investable business. And our primary focus is getting you to revenue. We want our programs to be cost neutral and revenue positive, and they're all engineered to do it that way. That's why we make you go through this market validation portion first, because we don't want to take your money if you're not going to be able to make money from it. And also, we goal ourselves on our ability to generate revenue for our portcos, because remember that thing about having that top 10%? Well, that's the way that we do it, is by supporting them. We're also priced extremely aggressively because this has to be within the reach of common individuals. One of the things that kind of broke my heart was with New Chip, and I found out they're charging $7,500 for advice. No results, right? You get maybe a pitch deck out of them, something like that. It's like, we're not about creating pitch decks here. We're about creating a business that's put some money in your bank account within 90 days of you starting the program with us. We want to get that done as soon as possible, because you're not going to want to stay with us if we're not generating income for you. Ways we help support our portcos is we allow them to procure through Gear Perfect. And that's our volume purchasing arm, and allows us to get you subscriptions to services on the cheap. So you're not paying the extra 30% that you would to a reseller or to buy it at a retail price. So we pass the savings on because we want the free cash flow for our portcos or our customers to be as lean as possible. So we try and cut a lot of the fat out of the process, and also out of your subscription costs. So you can get some pretty major discounts, especially in some of the larger products like Forecaster, for instance. We've got some very, very aggressive pricing on that. And the great thing is on some of these products, you even get access to a CPA that helps you. So if you're an engineer and you need to have bespoke financials, but you've got a great idea, then Block Perfect is a great opportunity for you to explore it.
I would like to invite you officially to the second volume of our podcast in the future, because people would be interested in AI, blockchain, intellectual property, and more issues like creator economy, business and growth, industry collaboration, and your long-term vision. So we can talk about that next time, if you agree.
Oh, absolutely. I'd be more than happy to.
Have you any final takeaway message for our audience? Brief one.
Yes. there's a reason you choose to start a business, and it requires a shift in mentality from being an employee to being an entrepreneur. And when you've made that transition, your relationship with money is going to transition substantially. Okay. The reason we put this together wasn't just, hey, let's create some companies and stuff. It was to create long-term wealth building companies that can create a legacy for yourself and your families and give you the time back to go spend some time in nature or go on that family trip. You know, the freedom that you see all these folks online with the, you know, extravagant YouTube channels and stuff like that. It's all achievable. It's all achievable. And today the economics have changed such to where it's our belief that your pursuit of that is more achievable and more safer long-term than it is to get a traditional job. So we're here to create, you know, the new picket fence, and we're hoping people will join us to do it.
Bucky, Nicholas Buchanan, thank you.
You're welcome.
And usually I would stop the recording now, but I will leave it for the behind the scenes, as to say a little bit. And because one more question I forgot to ask. Do you see any trends in your business? Or if you answer me briefly.
Yes, absolutely. There's a huge trend going on right now. If you've watched what's been happening with liquidity in the private markets, nobody has been funding anything. I last checked Crunchbase, and only like 343 deals are funded, where normally there's 17 or 18,000 deals funded by this time of the year. So what that means is that there's more than 300 billion in dry powder, which means capital that needs to be deployed in funds. And there's only between now and November 15th-ish that it needs to be deployed. So if you're out raising capital, there are funds that need to deploy these dollars, right? And especially if you're an AI company, the level of rigor that normally is required is a little bit of a bar low. If it doesn't happen by, say, beginning of November, 2024 is going to start with a bang, because they're going to have to start deploying it in the next year if they didn't deploy it the year prior. But generally, November 15th is about the cutoff. And everybody goes on holiday, and you know, nobody works in venture capital at that point.
Yeah, you are welcome to also to Europe, because I think European and American, there are some little differences between the startup environment, or I think little differences. So you are always welcome. If you come, I will take you to some venture clubs and places. We can have a good time, and you are always welcome for beer also, because we are famous. The country is famous for beer.
Yeah, I spent a bunch of time in Poland, a bunch of time in Stuttgart, and I had plenty of beer. So yeah, I've not had the opportunity to have beer in the Czech Republic itself, but I'd welcome the opportunity. I also wanted to leave you with this as well. We've got 3 different funding vehicles within Block Perfect that if you're already at like 100K in run rate revenue, you're eligible for Uncapped and Cap Chase. They're 2 programs that allow you to bid out your future sales, and you can use that for growth capital. So if you want to start a PR campaign, something like that, you can do that. The other one is for a thing called Turbo SBIR, and this is for loans from the U.S. government for research. And there has to be, you know, a certain number of Americans that are on the team. But I'll give you an example. They use AI to fill out the applications. The National Science Foundation will do an initial grant of about $250,000. And then if you satisfy all the terms of the grant, they'll then the diligence to go get the next like $1.5 million or whatever is a lot less. And all they want you to do is develop the technology. They're not looking for equity or anything like that. So when you see, you know, them negotiating budgets, say we're going to this much investment in technology and stuff like that. They're doing it through the SBIR system. They're doing it through grants and things of that nature. So those are opportunities to get non-dilutive equity or non-dilutive financing to start.
I would like to mention one thing for organizational reasons. I have created community of startup owners, not only startup owners, but owners of businesses in general. This is a very closed community, very safe community. So I would like to share your story there, if you agree.
Oh yeah.
You are welcome to share it as well with your own contacts if you feel like the energy is good. And I would send you the link for this recording afterwards. Tomorrow, I will try it. And it was a very fine talk. Thank you very much. And I hope to see you soon. And there is one in October, beginning of October, I am holding a mastermind for business owners. I would like to invite you for free to take part. It's an online event. I will send you the link.
I'd be happy to.
If you want, you can share your ideas about business there.
I'd be more than happy to. Thank you very much, Yuri.
Thank you. Take care. Bye-bye.
Take care. Bye-bye.
Bye-bye.